Good morning, everyone. Good morning, everyone. It is April 27th, Monday morning, 10:05 in the morning. It is so good to see you all this beautiful and excellent Monday morning. Lots to go over this morning. While we are always going to start our Mondays by updating the new listing to pending ratio, the single best leading market indicator available for the entire area, so that we can see exactly what is going on with the market, what's going on with inventory. And as a matter of fact, we're going to start with that. I was going to update you on a few articles that I published this morning, but I want to go ahead and start with the new listing to pending ratio. And then from there, we'll take a look at some really encouraging and really awesome data that we have been publishing here recently. I do have good news for you all. I do have some very good news for you. And let me show you really quick. Google Play Store, Austin Metrics is officially live in the Google Play Store for those Android users like myself. We are completely out of beta and we are up and running. So really exciting. Been getting a lot of fantastic and amazing feedback on this app, really across the board. People in the industry, friends that are in the tech industry, people have just been blown away. Agents have been using it. You all have been using it. So I'm really excited. But it is now officially live both in Google Play along with iOS. So take advantage of it. I'm really excited about it. And even in having conversations with some friends about the market, I just been hey, here, take a look at this chart, take a look at this graph. So really excited about that. And that is official. It is live, both Google Play along with iOS. Just search Austin Metrics and you've got access to all of the stats that we publish. Every single stat that we publish is available on that app. Really lightweight app, super fast, very, very easy to use. Let's go ahead and get started with a new listing to pending ratio. And I want for some of the newer agents that are members of Team Price, I see that Evelyn is here. So if we could all say welcome to the team, Evelyn. Evelyn just joined Team Price last week. Super excited to have you on the team. So more than likely, this is your first Monday morning touch point. So let me do a brief overview on what this is, why do we do this, and how does it position us to help our clients this coming week. A very simple metric that we track: new listings and then any price drop or price increase activity. That's going to be new listings on a week-over-week basis. Every Monday, we update the information. We've got price increase, price drop, and then the percentage out of anything and everything that could have gone up or down in value. What percentage went up? What percentage went down? BOM stands for back on the market. Properties that were under contract, maybe on hold, active under contract, and they came back on the market as active. And then the percentage in relation to the new listings. Active under contract and then pending. When a property is pending, it's no longer available for showings. It doesn't show up. You can't access the lockbox. But active under contract means that the seller is still entertaining a backup offer. We can still show the properties, follow the MLS instructions. So we like to see the ratio between active under contract and pending, but it also gives us the entire number of properties over the past 7 days that went under contract. And then this ratio, we call it the new listing to pending ratio. Very simple ratio. We simply divide everything that is new on the market by everything that was absorbed by the market. So for example, if you have 1,000 properties that are new on the market and back on the market, so you've got 1,000 new listings entering the market, and then you've got 1,000 properties that were absorbed by the market by going under contract, you've got a 1.00 ratio. And that's going to be like that perfect market equilibrium. Inventory neither goes up nor goes down. Let's say we've got 10,000 active listings on the market. 1,000 come in, 1,000 leave. How many do you have at the end? 10,000 listings. If the ratio is under 1, and let's just go with the 0.70 ratio. That means that 1,000 listings came on the market and 700 were absorbed by the market. So then what happens with the active inventory over time? Well, then it goes up. You started the week at 10,000 active listings. You're going to end the week at 10,300 listings because not all the new ones that came in the market were absorbed by the market. And we've been tracking this for years and years and years, a very long time. So it gives us a really good week by week pulse and sense on the market, which is so important nowadays. The industry is obsessed with what sold price in months of inventory. That's what the industry is obsessed with. And those are 2-3 month lagging indicators. It tells us what happened 2 months ago, 3 months ago. A property comes new on the market, then it goes under contract, then it sells. And then that sold affects what eventually will be active on the market. So although we always look at months of inventory, we look at obviously sold price. It's very important for the purpose of appraisal and pricing homes and helping our clients. The point of this Monday morning touch point is for us to really understand what's the temperature of the market right now, today, and how can we help our clients discern the market today. So that's the brief overview right there on why we do this new listing to pending ratio. First thing we're going to do is we're going to go backwards in time a little bit because agents can keep on updating the active, under contract, and pending over the next few weeks. Every other field, new, price increase, price drop, back on the market, it's a static, fixed, never to be changed. As soon as the clock rolls over tonight from 11:59 at midnight, that field is locked. It'll never change again. Whereas the pending and the active under contract, agents can say, oh, wow, I forgot to update the property. It went under contract last Friday. Let me change it to pending with last Friday's date. So that's why we have to go backwards in time just to continuously update everything that went pending in the previous few weeks. So from the 13th to the 20th, active under contract, we're at 761. That has not changed. On pending, we're at 477. 477. Let's go 1 week before that, 6th to the 13th. That's going to be 571. Let's go from the 30th to the 6th. That's going to be 602. A week before that, 23rd to the 30th, 584. That doesn't change. 16 to the 23rd, 592. I'm just going to go one more week, and that doesn't change. So we're good. Everything is updated. We are all good to go. So let's do a really brief little recap over the past few weeks before we start updating this week's number. As of now, last week, the new listing to pending ratio is trailing just a little bit the same exact week last year. And we can see that right there, same exact week last year was 0.73, this week 0.71. We're still going to get some additional pendings that are going to be reported pending, especially when you look at new construction, look at new builders. So it will outperform. That red means that we're underperforming. It's going to switch over to a green. Mark my words. It's only 0.73 versus 0.71, and we are going to, that's going to go up. That's going to go up to, I'd say, the 0.74 to 0.75. So that right there is going to mark 9 weeks in a row where the new listing to pending ratio this year is outperforming last year. And that confirms everything that we're feeling, everything that we're saying, all the other data points that we are overperforming last year when you look at the first quarter market, which is really good, really exciting. Let's take a look at the data and information from the 20th to the 27th. New listings. Oh, wow. Interesting. 1215. Wow. Okay, it's going to be interesting to compare this compared to last year. Same week. Next screen that I'm going to show you is going to compare. That seems like a very low number. Let's take a look at price increase. 168. That's also a low number. Let's take a look at price decrease. Oh, interesting. 1690. All right, we're noticing an increase on price drops, 91%. That right there, my friends, is going to be the largest percentage this entire year. Largest percentage going all the way back to October, 91%. It's a little bit higher than I was expecting. It's been trending higher, 82, 87, 90, and then there's that 91% price drop. That number surprises me. So I'm now surprised with two numbers. One of them is only a 1215 new listing. That seems extremely low. Let's take a look at the gap so far this week compared to last year. We'll take a look at that here shortly. Back on the market, we're at 211. Increase back on the market. Okay, so we've got some numbers that are not necessarily working in our favor here. 547, that's a solid number. This is where you get to guess. I need 5 guesses. 5 guesses for properties that went pending. Let's go ahead and get 5 guesses on properties that went pending. As soon as you give me the 5 guesses, then I will read it out. We've got Charmaine starting us off at 244, followed by Melanie at 275. And let's keep on going here. Okay, we've got 239, 206. We've got 40. Okay, 258. All right, good stuff, you all. Let's take a look at it. Let me go ahead and click on it. Let's take a look at it. We are at, let's see here. Okay, 217. 217. Not bad. Not bad. Not great. I would even say kind of slightly disappointing on this 217. Slightly disappointing. So we've got a few numbers, and this is why we do this weekly. So let's compare week over week, because I'm very curious about what's going on with that number of new listings. Now, to put things in perspective, let me take a look at the email that I sent out on that Monday recap last week. The Monday recap last week, because I email you all this information as soon as we're done with the meeting, the ratio is at 0.51. So we are outperforming the same exact day. So last week when I gave you the ratio, and it jumped up from 0.51 to 0.71. We're at 0.54 right now. When we pulled this information last week, we're at 243. And we're at 217 right now on the pending. So this exact time, exactly 7 days ago, 243 pending. 571 active under contract. Right now, 547, 217. So we are absolutely underperforming properties that went under contract this week compared to last week. Ratio a little bit better because last week we're at 1403 new listings. When we updated, we're only at 1215. Let's take a look at the same week year over year. Yeah, take a look at this. Down 13.4, 188 so far, 188 less new listings entering the market same week. Now, it is 10:18 a.m., and we're going to see new listings come on the market between now and 11:59 p.m. Oftentimes, we'll see about 100 or so listings come on the market. No way we're going to see 188. So this is a low number. What is going on, you all? Why do you all think that the number of new listings entering the market all of a sudden just took a massive drop? What in the world is going on? What do y'all think? Any thoughts? I mean, what are your clients saying? What are you noticing out there? Any thoughts? Like, what are people waiting for?
Dan?
Yes, go for it.
I have a thought.
Yes, please go for it.
I'm seeing clients noticing how long the houses are staying on the market and going and pulling them off. I don't know if there's a lot of withdrawals or a lot of listing agreements that have ended, but they're not listing as fast as they used to. They're waiting. Also, I've noticed the houses are not ready. Like I had one that I went to do photos and ended up not being ready. We didn't do the photos and took 3 weeks for them to get the house ready.
Interesting.
So that's that too. So I don't know. Anybody else?
Yeah, we are not noticing an explosion of withdrawals and expired. It's high historically simply because of the state of the market, but certainly not a huge explosion. I mean, we had it was raining last week. maybe that contributed, right? It rained a lot last week. I mean, here I am. I always criticize the people that say, well, it's the rain, it's the traffic. Maybe that contributed. I know that I've got one listing coming on the market, hopefully Thursday, another one first week of May. And to your point, Sonia, I was hoping to get those two on the market last week. And one of them, I couldn't do it because I couldn't get vendors in there fast enough. And the other one, we just had to do a lot of work on it. So it could very well be the case. Photos getting delayed due to rain. So we could very well see a spike this next week on the number of new listings, but something to keep in mind, that is a very low number on new listings entering the market this week, and yet an increase on the number of price drops. So we are seeing more sellers dropping the price this next week as a percentage. I mean, this is the highest one going all the way back to October. So it's a fairly high number, something that we really need to be on the lookout for. Let's start updating the monthly information right here. First thing we're going to do is go backwards in time a little bit, and we're going to be at 2274. That doesn't change. Let's go to active under contract. We're at 2420. That does not change. Let's go this month. This is going to be your month to date number of new listings, 4958. 4958 new listings so far this month. Number of price increase, we're at 723. Price decrease over 5,000. We knew that was going to happen. 5916. Okay. 5916. Last month, 5991. A year ago, 7459. I don't think we're going to beat last year's price decrease. We already beat the price increase. So that's a good indicator right there. We're getting more properties going up in value this April compared to all of April of last year. 74.59 on a price drop. We're only at 59.16. So I'd say we're going to have less price drops this year compared to last year. And there's that 89%. This little bump to the 91% that we saw was just this past week. Not enough momentum to affect the entire month. The entire month is at 89%, which beats the 92% April 2025. Let's go ahead and take a look at back on the market. We are at 776 back on the market. That's going to beat last year. We're going to have more properties back on the market this year compared to last year. Last year was only 13%. This year's already 16% back on the market. Active, and keep in mind, an increase in back on the market actually points to a better market. It's counterintuitive. A lot of people are like, oh, increase in back on the market is because people are not getting financing. That happens within a very short period of time. And when rates go up by more than 50 basis points, that's not the case right here. What oftentimes happens with properties that go under contract really, really fast, that the buyers feel like they made an impulsive decision. We still have an environment where new listings are entering the market, and then the buyer gets cold feet. They see something else that came in the market. They go ahead and terminate. They feel like they overpaid for the property. And the better the market, the higher the back on the market. Active under contract, 2129. So active under contract is going to beat last year. We're already at 2129. Last year was 2220. And let's take a look at pending. We are at 1436. So we're at a 0.62. We are going to beat last year. Last year 0.65. We're already at a 0.62. So we are having a better April. This last week is something that we need to track very carefully going into next week. What could very well happen is just this bump in pending, this bump in new listings entering the market. And let's just go ahead and attribute that to the rain. Rain does affect our area. I don't know about you all, but I just felt like staying in the house, right? Rain is terrible in this area. So more than likely, that was the culprit on why we saw such a dramatic decrease on the number of new listings entering the market, and then a slight decrease on the properties going under contract. Withdrawn, and this answers your question, Sonia, 545. We're not noticing a big increase in withdrawn. Expired, only 230, but most properties will expire at the end of the month as opposed to the 27th. So we do have, 4 or 5 days left for us to get the true expired picture. Let's take a look at the month over month. Month over month so far, we are down 5.3% on the number of new listing or active listings. New listings, we're down 16.5%. Keep in mind, we're comparing all of April 2025 compared to the first 27 days or 26 and a half days of April 2026. So this number is going to shrink. The question is it going to shrink by 979? No, it's not. So we are going to end April with less new listings entering the market compared to April of last year. We already have 59 more price increases. We've got 1543 less price drops. This is going to be the first month going all the way back to November 2024 that we've had less price drops year over year. That's another turning indicator of the market. Confirmation that I'm very bullish for Austin real estate 2026. 9 less back on the market, 91 less active under contract. That's going to go positive. 683 less pending. That's going to go positive. So we're going to have a negative reading on new listings and a positive reading on pending. I'll tell you that right now. We've been doing this for so long. Every time we see numbers like this, it switches as we approach the end of the year. More pendings, less new listings entering the market. And what does that tell us? How is that going to affect inventory? Months of inventory is going to go down. In saying that, let's go ahead and transition to a few articles and a few posts that I did this morning. That's really good news. Take a look at this one. Austin housing market update. Months of inventory drops year over year for the first time since 2021. 5.71 months of inventory. Going all the way back to 2021, every single month, year over year, months of inventory was increasing, going higher, higher, higher. All of that changed right now, and it changed this morning as we were updating the data. And you can see that you've got right there, April 2025, that's going to be that red dot compared to April 2026. And we've got a slight decrease, 5.71 months of inventory compared to 5.77 months of inventory. So that was a really interesting little piece of data that we just came across. And let me look at a few other items. This one confirms what we've been saying. Year to date, we're down 3.8% on the number of new listings entering the market, and we're up 2.5% on properties that are going under contract. So we've got a higher demand this year along with lower supply of new inventory hitting the market. Now, here's another interesting one, that something that we need to be really attentive to. Every Monday, part of my Monday routine is I go to tax record and I pull up every property that is listed for as a distressed sale, pre-foreclosure, in foreclosure, and already real estate owned. As of this morning, 2,625. That's going to be a 2.58% increase week over week, a 5.55% increase over a 3-week period, and a 19.43% increase in September. Something really interesting happened in April. So from January 2026, that's where the number was. That's going to be that gray. And then all of March, we held steady. Nothing really happened in the distressed sale. Properties didn't get listed as a pre-foreclosure, in foreclosure, or real estate owned. And we saw a little bit of a bump right there in April, and then we just kept on seeing it go up. And this one went up by quite a bit, April 27th. So I will take another reading. I only do this on Mondays. Every Monday, I just do a snapshot. What is currently listed? Travis, Williamson, Hayes, Bastrop, Caldwell, Burnett within our MSA on this distressed sale inventory. This is going to be from Realist. We cannot pull this data from the MLS because only a fraction of properties. I mean, we're talking about, if I were to look at the distressed market on the MLS, it's going to be pitiful. It's not going to be much at all. For example, pre-foreclosure, 18 on the MLS. In foreclosure, 13. Real estate owned, 105. Whereas when you look at tax record, that number just skyrockets. You're at 26, 25. So that's another interesting little piece of data for us to constantly poll and constantly research. Let me show you a few more things that are noteworthy. This is another really interesting data point. And the title of this article that I wrote, Austin's 2 hottest and 2 coldest zip codes are all inside the city. It's amazing. The message that I am focusing on right now is that we cannot treat Austin as a monolithic market of like, what is the Austin market like? It's averages and medians don't matter right now when you look at such a bifurcated market. Because when you look at the 2 hottest zip codes in the entire area, we are looking at 78749 at only 1.2 sellers per buyer. You've got 78613 at 1.2. Let's look at a few other ones. We've got, incredible. Some of these in this one right here is a balanced market. There are only 2 hot markets, 3.9, and we consider that hot because even though we've got more sellers per buyers in that specific zip code, what I'm using to identify a warm, hot, warm, balanced, cool, and cold market, I create what's called a composite score that takes into account a lot of different factors: activity index, days on the market, number of price drops after it goes under contract. And with all of that, we say, okay, well, this one right here might have a little bit less inventory, but it also has a way cooler activity index. So we can't call it a hot zip code because of the current level of absorption. So there are only 2 zip codes that are hot, 78739 and 78749. Those are the 2 hot zip codes. And then there are only 2 zip codes that are cold. And that's going to be the 78705. That's going to be West Campus. And then the 78730. That's going to be the River Place area. Those are cold. Those are the only 2 zip codes that are cold. Everything else is just right down the middle. The single largest percentage of zip codes at 56%, 42 out of the 75 zip codes that we're tracking are just right down the middle. They're just balanced market. Leverage could be swayed either way to the buyer or the seller, depending on the property. They're just a balanced market. We've got 10 that are trending warm. We've got 19 that are trending cool. But opposite sides of the equation, 2 are extremely hot, 2 are extremely cold. Everything else is just right down the middle. So it's an interesting analysis of the data, and it's all within the metro area, all within the exact city of Austin. Here's another really interesting thing. When you look at the median sold price to income ratio, we are now at most affordable April in 6 years. This is the most affordable April going all the way back to 2020. And that is using the median sold price to income ratio, which is huge in an area that statistically has a 25% cash buyer pool. 25% of all the closings that happen in the Austin area are cash, which means they're not influenced by the rate. So this is the most affordable April going all the way back 6 years. When you add in new construction where they are offering 3.99, 4.125, it is certainly making the area very attractive, which is why we're seeing a higher demand for Austin real estate, because you've got the attractive rate environment, especially for new construction, with the pricing that we've seen and the erosion in pricing that we've seen over the past few years, which makes it a very exciting area to be in, especially with the increase in employment that we're seeing. Let's take a look at the Austin Daily Briefing, and we are up 1.1% on number of active listings, and we're up a very encouraging 4.8% on the number of pending. There you can see the number of active listings going all the way back to April 2022. This number ticked up a little bit. We're at 47.6% of all active listings have had a price drop. Listing agents and sellers, be cautious. We are seeing a renewed momentum within the market. We are seeing a higher demand on the market. But unless you're in the 4.8 zip code, be very cautious. That doesn't mean that you can push the price that much because buyers are still value purchasers right now. They know the market. They know what's going on, and they know what kind of real estate they can buy with their dollar. So some sellers and some listing agents that were just a little bit too aggressive on that list price because they saw the demand, they saw the momentum, they're now having to correct. They're having to do the price decrease, which was why we're at that 91% price drop in relation to what could have gone up in price versus down in price. There's your active listing count, up only 1.1% year over year. Pending. Great news. We now have not only 4.8% more pendings compared to the same exact day last year, but we now have more pendings compared to 2 years ago, 2024. So the market is not only outperforming last year, it's outperforming the past 2 years, and that's really good news. On the activity index side of things, another good news. We're up 2.8% on the activity index, pending divided by active plus pending. We're over 20% on resale. We're over 32% on new construction. Very healthy demand on new construction. And then we are over that 20% mark, which is the danger mark on the percentage pending divided by active plus pending out of everything that could be under contract, what currently is under contract. There are two cities that are over 30%, Cedar Park and Round Rock, doing extremely well. Buda was on that list for the past few weeks. It's now off that list. And you can see right there, 4.9, number one zip code. By far, half of the properties that could be under contract in the 78749 is under contract. And that is just amazing. On the bottom side of that list, Wimberley right now is taking last place. Just beat out City of Austin. Wimberley is now in last place at a very slow 9.14 activity index. Let's take a look at the months of inventory. We are down 1% months of inventory. The number one city with the lowest inventory is going to be Cedar Park, followed by Pflugerville and Round Rock. That pocket is doing very well, nice absorption, not as much inventory flooding the area, which is causing that months of inventory to stay low. On the opposite side of the spectrum, 05, brutal. 25 and a quarter months of inventory in 05. No one is buying West Campus right now. Prices are going to plummet, and then investors are going to have some really, really good opportunities in West Campus if they want to cater to that specific tenant pool. I would not touch that zip code quite yet. I'd keep monitoring it, keep looking at it for the next 6 months. I expect with that kind of inventory, I expect a good 15% price drop within that specific zip code. Looking at 25 months of inventory, there's no way that that doesn't happen. You go all the way up here to Cedar Park, Pflugerville. I just can't envision an environment where prices don't go up year over year. I mean, there's no way. With 2.9 months of inventory, that justifies a price appreciation over the next 12 months. City of Austin, we are down 13.5%. 13.5% months of inventory for April 2026 compared to April 2025. Very good, very healthy right now. We're under 6 months of inventory at 5.41. We were at 6.25 this same month last year. We are expecting, when it's all said and done, that 9,356 properties will have closed between January and all of April. This includes our forecast of what will continue to close between now and the end of the month. So we're going to be on the positive side, 2.1%, which means for us agents, we're expecting 531 closings per 1,000 realtors, an 8.3% gain. When we were monitoring this data last week, it was an 8.1% gain. So that got bumped up to an 8.3. So where are we with pricing? We're now positive on average. We were negative last week. On the average, we're positive. We're positive only $2,931, and that's only a 0.5%. But the fact that we're positive is really, really good news. On the median side, year over year, we are negative. We're positive both month over month, which historically, April will give us a month over month positive reading on pricing, both average and median. Year over year, we did transition positive on average, still negative on median, which means that on the average sold price, we are still down 14.11% from when the market peaked May 2022. And on the median side, we're down exactly 20%. Another interesting thing that happened from Friday to today is we've been noticing a pretty substantial negative year-over-year price drop on the upper 25th percentile. Right now, it's only $50, so it's statistically zero. So the upper 25th percentile is selling at exactly the same price this year compared to last year. We are negative 2.9% on the bottom 25th percentile. That is why the average price went positive year over year, because the top 25th percentile went at exactly the same price, just only $50 less. So that caused the average price to go up. So that's a little bit of a shift in the market that we saw from Friday to today. Another slight shift in the market that we noticed from Friday to today: on Friday, 6 cities were up when you look at the median sold price last year compared to the median sold price so far this year. Now we have 7. 7 cities are up and 23 cities are down. We have approximately 3.1 sellers per buyer in the entire market. And then you can see the breakdown both for cities and for zip codes. And this chart was just updated this morning. This is going to be your absorption ratio, sold divided by active. And we're at 14.7. Keep in mind that we're still going to have at least 5 days of sold data that will be published on the MLS. And then we're going to have a lot of agents that will continue to update their sold data into the first 2 to 3 weeks of next month, which means that we are going to outperform the 18.2. We're going to have a better absorption ratio this year compared to last year. And the same thing is going to happen with the market flow score. We are at a 2.79 reading right now, but it's really partial data. We're still waiting for pendings. We're still waiting for sold. I start updating this information just a few days before the month turns over so that we can see the rate of increase. But I'm telling you right now, last year it was 3.84. So far this year 2.79. It's going to outperform last year. And that's going to mark the 3rd straight month where the market flow score, which is a score of 0 to 10, 10, hottest market in the world, 0, there is no market. We need 4 months. We need to consistently beat out last year's market flow score for us to discern that we're in a recovering market. Now, I'm already placing the market in a recovering market. That's where I'm in. What this does, it confirms that feeling. If you go to Austin metrics, and let me go ahead and just show this to you really quick. We do have under charts. So if you go to Austin metrics and you go under charts, there's the market cycle position, recovery, expansion, hypersupply, recession, and we are in recovery right now. That is where I would place the market right now. Let's take a look at the economic calendar for this week and how it's going to affect rates. It's a very important week for rates. And take a look at the email that I sent you here earlier today. Let me go ahead and pull up that email because it's a very, very important week for rates. Where is my Monday reminder for you all that I sent this morning? What time did I send you that? Like at 6 or something a.m.? Yes, at 6:33 a.m. Let me go ahead and just pull up this email for you all. And let's see what's happening. What kind of news are we to expect this week? And we've got, and this right here is sorted based on most critical dates to least critical dates. Monday, today, is actually the least critical date. Right now, the bond market is actually up 2.6 basis points. which is not the best. We're approaching the highs from Thursday. It's supposed to be a quiet day today. The two most critical dates this week, it's going to be a combination of Wednesday and Thursday. That's going to be Fed rate plus housing starts, building permits, and then PCE inflation, GDP, jobless claims, mortgage rates. So it's going to be a very important week for rates. And let's go ahead and just take a look at the actual calendar. Tomorrow, we're going to have the Standard & Poor's Case-Shiller Home Price Index. I absolutely love that index because at 8 a.m., when that is released, we are able to update two charts that I love under macroeconomic data. One of them is going to be the National Market Index. This chart gets updated as soon as that data point is released. And then we're also going to have the House Price Index. This will be updated just a few days afterwards, and this is where it compares the top 40 cities population-wise. And then we also track all of the other cities that Fannie Mae or Freddie Mac actually tracks. So that's going to be a really important day tomorrow that we'll update all this information. We've got consumer confidence. And then going into Wednesday, we've got building permits, housing starts. And what else do we have? We've got some commodity data, and that's the big one right there, Fed interest rate decision. Well, the press conference is going to be more important than the Fed interest rate decision because we know what the Fed is going to do. The Fed is not going to increase or decrease the rates. They're not going to do that. And then going into Thursday, we've got PCE, Personal Consumption Expenditure Price Index. We've got GDP growth quarter over quarter for Q1. We've got more inflationary pricing right there, PCE. They're expecting it to go down. So if it misses that, you can expect the bond market to go up. So it's going to be a big inflation day on Thursday. And then on Friday, we've got some manufacturing data. So really big, really important week for rates. And the importance for the rate decision is going to be mostly concentrated within Wednesday and Thursday. So whatever happens on Wednesday, I will go over that information during our Wednesday training. If I'm able to update the building permits, the housing starts, I'll have some of that information ready for you all. If not, then we will update all of this information on Friday. So we do have the Wednesday broker Q&A contract review that we're going to go over the contract proficiency. And then we do have a Friday meeting this Friday. So be sure to join us for both. But it's going to be a very important week for rates. Yo, it is 10:48. Any questions? Any questions? Questions, comments, concerns, criticisms, or complaints? Any questions? Okay, Violet, you've got a question. Please go for it. Are you able to? Yes, go for it.
Yeah, okay. On the app, the lease information, besides single family, does that include condo, townhome, and the plexes?
Yeah, so I don't have lease information on the app apart from just the PDF reports. So when you go on the app and you go to whether it's more or you go to charts, if you go to more and then you click on lease, then that's going to be residential, which is going to include condos. So it's going to be single family condos. And that right there is going to pull directly from the PDFs that we have under the lease statistics under Insight. Version 2 of the app will include specific charts like you see all the other charts for zip codes and cities. Will include a lot of those charts for the leasing. Now it just references the PDF, but it's all residential, including condos. Does that answer your question? Okay, good stuff. Any other questions, you all? Any other questions? Very good question. Any other questions? Going once. Going twice. All right, you all, that's all I have. Thank you all so very much for joining. Super appreciate it. As always, if you have any questions, comments, concerns, criticisms, or complaints, please let me know. Always here to help, and hope you have a great week. Super excited with the direction of the market, and things are continue to improve. The momentum is there. We are going to keep tracking what's happening with new listings. More than likely, what we're going to notice is a bump next week when you look at the number of new listings as the weather cooperates. But otherwise, I'm very, very encouraged, and I'll chat with you later.